guys, it's me again. On this section, someone told me to explain more on how to get valid OC levels. Remember when we were talking about these key levels, we said that the normal key levels are those A shapes and V shapes. Let me just draw it. The A shape, the V shape. We have the A shape. This is the A shape. And this is the V shape. I'm coming. Oh my god, I don't understand. So sorry. A shape and V shape. So these two are like the main ones that most people know already. And then if we now talk about the key, what they call it, the open close key level. Someone asked me about the open close key level. I should try to explain it, how to get valid ones. But for starters, I'll explain how the open close key level works. So you can understand it better that way. You understand? So please don't mind my drawing. Let's say you have a key level. You have an open close key level. An open close key level in general sense is just a candle which closes and gives you a gap. It closes and gives you a gap. After there is a little gap after the main candle was already formed, you see that the gap will be a little bit bigger, at least just a small space, that kind of thing. So if you have this kind of gap already, what you just need to do for you to confirm if the open close level is a valid open close, you have to wait for price to tap into it, and then you need to see a rejection. In order to confirm your bias that you want to know this is a good open close level, you have to wait for price to tap into this zone. Let me give you an example of what I'm saying. So let's say price goes up and tap into this zone. What we are expecting price to do is, since we've seen that here is an open close level, in order for us to know that this is a valid open close, we need to wait for price to tap into this zone, close below it with a rejection. That is, if it's on the higher time frame, because where we get more higher probability open close levels are like from the daily and the weekly. The 4 hours too could work, but then remind you need to see that price will tap into it, give us a rejection. Once there is a rejection candle, it has now confirmed, and let that rejection candle close. Let's say you saw that open close level, you saw it on the daily time frame. After you saw it on the daily time frame, price taps into it. You have to wait for one full day to close, for that candlestick to tap and then close finally, for you to confirm that the rejection was valid. You do not just because you saw it a week, then you now be like you want to start entering. No, you wait for that full day to close, then you can now go on to start looking for an entry. Now, when you're trying to look for entries, remember, it's just the same thing like the CRT I told you guys. Once price has tapped into it and giving you a rejection, the basic thing that you're looking for right now will be this. You're going to be looking for a sweep, something like this. The price will do like this. Then you'll be expecting the price will come back to here for you to sweep it down. Because whenever price gives you this kind of rejection, sometimes it forms a CRT. So that is just it for the open close. So now let's go to a practical term, like real world scenario. Now I can see this on NZD/USD. On NZD/USD, if you can see, price gave us an open close level. Mind you, before we start even talking about that one, on the weekly time frame, you can see that price on that time, price was trying to it tapped into this key level here. It tapped into this key level, gave us a rejection. It tapped into this key level, gave us a rejection. You understand? it closed above it, telling you that there's a possibility of the next candle going up. But then you don't know the actual direction. You go down to the lower time frame and then you try to check, and then you now see that okay, price tapped into it, and then it started buying. As it started buying, what are obstacles? What can you see that price could reject from? Now, if you look at here now, you can see the after price tapped into this zone, by the left hand side, what else can you guys see? You can see that there's this first open close level, there's this second open close level. Now someone will be like, okay, see this open close level, there was a rejection. But then, mind you, in order for you to confirm your open close level, for it to be valid, you need to wait for a rejection, something like this. And then you need to go to the lower time frame for much more confirmation. You need to see that your CRT formation, that is like your QM formation. So if you don't see it on this particular candlestick, it's not valid. Do you understand? So let's go to like the 1 hour that I told you. So let's test that other one that price taps into, that first open close level that we saw that price taps into and rejected, that got cancelled. Someone will be like, why didn't this particular one hold? Remember, what we're looking for is that our sweep. So let's see. As price taps into it, 2 time frames lower, the 1 hour time frame. On the 1 hour time frame, after the price tapped into it, what can we see? There was nothing actually. There was no sign at this zone. This was where the daily candle was. There was no sign. There was nothing there. Price didn't give us our QM. You can see. So now, we know that our particular place is invalid. We just need to wait for a much more better open close level for price to tap into. And then, voila, we got this other open close level. This other open close level. Price tapped into it. Now give us our CRT formation. That you know that once this candle it closes this way, that is going to start going down. Price is a must to start selling. So now, in order for us to now enter this trade, 2 time frames lower, just like what I told you, you go to your 1 hour time frame. Remember, 2 time frames lower, if it's from the weekly that you saw that thing, 2 time frames lower is the 4 hours time frame that you use as your entry. Now, on the 2 time frames lower, what can we see here? We can see here now, we can see our, what do you call it? We can see this one. This is our QM. We can see here. And we can see here. So now, for us to determine where price is actually going to enter from after we've seen this thing, we first of all want to see that break. And now we've seen that this break, price had to break from this particular zone. You see that price had to break from this particular zone. But then you need to check where is there any liquidity around. What's the best thing that you can say, okay, this is why price is supposed to get to this zone and then sell. If you look at here, you see that there was a rejection candle that price created that gave us this this particular candle. This is what I'm saying. If you see here, this particular key level, this is the key level I'm talking about. So this key level like this, as you can see, you see that price broke this, gave us a QM. Normally we are supposed to enter from this QM, but then if you check it, you see that here there was an FVG telling us that price is bearish already. You get, and then we need to look for an inducement, like a liquidity that price could tap into. What is the closest place that price is about to like start going well for us is what we'll ask. Because normally, after it has given us this kind of double break of structures, it has already given us a confirmation that we are going to be selling, but then price might not actually go back to our QM. So we usually use what is closest, you understand, to the liquidity, and this particular zone is what is closest. So let's say you enter from this zone, let's say you enter from this zone, and then your stop loss will be above that high, so that you could be in a safer side in case price wants to dance around, that kind of stuff. It should be above this particular high where that key level is. Yes. And then for me, I usually target 1 to 3. So you could just target 1 to 3 like this, and then voila, price went up. You still look, if you look at this what they call it, you still look at this chart, there's also another entry. That price still showed again. But then in order for you to confirm everything that I just said, it's just more about practice. So the more practice you do, you get to understand. So if you see here now, after price tapped into it, it started dumping. If you look at this particular zone now, this one, let's use this one. That is also a key level. That particular zone has become an A-shaped key level, you understand? That place has become an A-shaped key level, telling us there is a possibility that price could tap into there and then start selling. It's just another level, that kind of thing you get. So in order for you to look for what price is doing at that particular zone, what price is reacting at, like how price is reacting at that zone. So if you look at that zone now, you can see that price actually is not showing us anything clear yet. It's not showing us what we need. You understand? It's not showing us something clear. So in order for us to see it much more clearer, we click on our line chart. So now on our line chart, we've already seen that there's been a breakup structure already right now. After price tapped on that daily key level, like you remember this zone now, this particular one, this line is from the daily key level. So price has already broken it and then telling us that we are now selling. And then you can see that this zone that price created, or even any of these zones, could serve as our inducements. And then the high of this A shape will be our entry point for more sales. I don't know if you guys are understanding what I'm saying. But then if you don't understand, I'll still do more videos concerning it to explain to you guys, for you guys to understand better. I just hope this one will do for the meantime. You understand? So once you've been able to set your stop loss above that week, 1 to 3. Remember, how we were able to get this particular sell was because of that daily key level. Because after we've seen that entry already, this particular daily key level, this key level was what gave us that sell. So this key level was what gave us this sell. Also, like another confirmation for us to look for another entry. Like this particular one gave us this sell also, like it was another confirmation after price tapped into it, and you already knew that we were already selling. So as we saw that price has already tapped into it, for us to see a continuation to the downside, we used the key level as more confirmation, you get. So that was why I was able to go down to the 1 hour time frame to use it as my decision point, you get. So that was how I was able to get these particular trades. So I don't know, the person that asked me about how to get a valid open close level, this is just the simplest way of how you can get a valid open close level in order to like understand your bias. And you just get simple. For me, I just always target 1 to 3. You could target almost everything because normally the CRT works with you doing trying to do the candle, that is the first candle, 50%, if it has tested it 50%. So if you're trying to draw this your 50, this our I'm using the GAN box. If you're trying to draw this particular GAN box and you're trying to check if your CRT candle is okay, if it has not yet tapped into the 50%, yes, it's still valid. So like this, you can see the price has yet to fill into all this low, to the first low, for it to be covered for that 50%. So you still have much more room. So that's why we were able to enter this trade. You get. So in essence, this is how to get a valid open close level. I just hope this was very insightful, and thank you.